Before we get into this video, I just want to say quickly, use my code at MyFundedFX LD15 to get 15% off all plans. It's currently the biggest code at MyFundedFX. The code they're running is only 10% off. And the way the industry is at the minute, you want to make sure you are with a trusted firm, and MyFundedFX most definitely is. What's going on, guys? It is Oldie the Trader. It's been a very, very long while since I've done a video, but yes, I am back. Before we start, I have lost my voice. I was at a Liam Gallagher concert last night, so you guys need to bear with me. Today, we are going through my 95% win rate London model. Now, this is not a lie. Every time I've taken this model, when everything lines up, I've not lost. It isn't necessarily the most consistent model if you're just watching one pair, but if you watch numerous pairs, then you will sure to be finding one at least once a week. This model alone bought me some private equity. It also got me funded with Skilled Funded Trader and DIF funding. Obviously those firms are not around no more, so yes, very disappointing, but one of those things. It's a very, very simple concept, yet it's very effective. It's taken into account the open, high, low close and open, low, high close of a candle, of the hourly candle specifically. For those that don't know, this is probably, in my opinion, the most important aspect in trading. Once you crack the code of open, high, low close, open, low, high close, you can trade. This is what made me profitable, realizing this, taking into account the open, high, low close and open, low, high close of a candle. So the model is very simple. It looks like this. This is the Asia range. We want to see some sort of accumulation. We do not want to see it be an expansion. If it is an expansion, we don't trade London. It's that simple. If we see the accumulation, we must also have a clear daily and hourly bias, 4 hour as well. You need to know where price is going on the higher time frames. It doesn't matter what it does in the lower time frames. If the higher time frames are not clear, you're not trading. So now let's say we have a clear daily bias, we have a clear hourly 4 hour bias. We believe price is going to go higher for the remainder of the day. So what we want to do, we want to look at 3 AM for a liquidity sweep and also a open, low, high close delivery. This means when the 3 AM candle starts, we want price to go lower. Take an element of sell side liquidity. It could be Asia low, it could just be a normal low, and then start to break higher. We want to see it start breaking higher from 315 to 330. This is the key point. Price is supposed to make a reversal. If it starts happening at 340, 345, yes, you can still enter the trade, but I'm saying preferably we want to see it around 315 to 330. And as you can see here from my little drawing I've done, 3 AM opens, price goes lower, takes an area of sell side liquidity, we start to break higher and we start targeting buy side liquidity. You see here, this is a fantastic example. Obviously, I'm not doing all the higher time frame analysis, but if your mind was set on a day of buying, you think the hourly is going to go higher, the daily is going to go higher, then you're looking for buys. And as you can see here, if you look at the bottom here where the time is, 3 o'clock opens, we go lower and we keep going lower. Then we take an area sell side liquidity. Once this happens at 325, we have a massive move up. Now, the entry for this isn't very strict. I have sometimes, well, a lot of the time, enter the trade as soon as I see a strong bullish candle. If a fair value gap is something created within that, I will look to enter off the fair value gap so my entry isn't so high up and I get a bit of a better entry. But sometimes if it's just a little shot up like that and the time aligns, I will mark it enter the trade and you can get some great risk of reward trades with it. And as you can see, open, low, high close delivery. The 3 hour candle opens, we go lower, we take out the sell side liquidity, and then we target higher price action, as we can see. So here's another example. The bias isn't necessarily correct, but you would have still been able to get a trade. Here, if I can just find my square, we can see price. Oh, let me just turn that down. Targeting this fair value gap. The 3 o'clock candle opens here. Remember to look at this low here. 3 o'clock candle opens, we go higher. Now, this is still liquidity. Inefficiencies is liquidity. There's internal liquidity and external liquidity. So we go up, fill this internal liquidity, and as you can see, we start to break lower. If I seen that and I was confident on price going lower, I would have entered the trade here. It would be as simple as this. Enter the trade. And to be safe, I probably would have put it here or something like that. Target a 2 to 1. And that would have been min done for the day. Nice and easy. Here's an example we see on US CAD. We see price accumulating in Asia. We go into London. We still continue to accumulate. Again, our bias for the day. We need to make sure we are clear. It's bullish. So we know we are targeting buy side liquidity overall. 3 o'clock candle opens. here, and as you can see, we are targeting sell side liquidity, open, low, high, close delivery, and we take all of this sell side liquidity here, and then within doing that as well, refill this inefficiency right here. Again, bullish candle at 335, still a great time to get in line. And again, it would have been a matter of me entering just like this, targeting Asia highs as a clear draw. And again, that would have been another 2-to-1 trade, what would have been a fantastic result. It is a very, very, very simple model. All you want to do is pretty much see accumulation, manipulation, distribution. You want to see price accumulate. You want to obviously have a clear bias on the higher time frames. You wait for the 3 o'clock to open. You want that to manipulate into the opposite direction, taking an area of sell side or buy side liquidity, depending on which direction you believe price is going to go. And then you want to see a displacement higher going in line. Roughly around the time from 315 to 330, a little bit higher is fine. To make that sound more clear, think about it like this. If you're the hourly candle and your objective is to go higher, but you still need to make the low first, every candle has to make a higher low, what are you going to do? You're going to get it done early and quick. If you know mostly that you need to be a bullish candle, you're going to put the low in quick, take whatever liquidity you need, giving you the rest of the time for you to expand higher. Just think like that. And as you can see here, the 3 o'clock was like, okay, I need to take some sell side liquidity. Goes lower, giving the rest of the time for the hourly candle to expand higher, with the candle after that continuing. So that's pretty much it. It is a quick insight on this model. If you would like me to do like a 6-7 episode series on this, like a mini mentorship, I'll happily do that. I'll go very in depth on the open, high, low, close, on AMD, and on the whole model itself. I'll go completely in depth. Make sure to use my affiliate code at MyFundedFX. It is currently the biggest code going there at the minute. It is 15% off. The code is LD15. And with the state the industry is in at the minute, with firms closing left, right, centre, you need to make sure you go to a trusted firm. And MyFundedFX most definitely is. So remember to use my code LD15 to get 15% off.